Hi and welcome to the weekly market update. It is Tuesday the 9th of July 2013. Okay, in terms of data that we saw yesterday, we had the German trade balance out first off. We saw sort of a worsening picture for the German trade balance here. We saw increasing imports and falling exports, so it's sort of a bit of a worse picture for Germany in terms of their trade balance overall there. We also had a Eurozone Sentix survey, which is a sentiment survey. Saw that coming in down 12.6 yesterday, and otherwise we had German industrial production again coming in down 1%, so a little bit worse than expected there for German industrial production. Otherwise, we've seen data this morning out. We saw Chinese CPI data overnight. This came in higher than expected, came in at 2.7, so more inflation than we expected to see there in China. Otherwise, in terms of data this morning, we've seen from the UK some quite weak data. We saw industrial production and also manufacturing production. Industrial production came in flat, and manufacturing production we saw coming in down 0.8%. This not very good data for the UK. We had seen some strong data, but this has sort of taken us back a little bit. We'll be getting the GDP readings out for Q2 soon. The estimates will start coming in next month. So we've seen with this data, this will contribute to it and might take people's high expectations down a little bit for the UK. Otherwise, in terms of news that we've had earlier this week, we've had Greece receiving their next tranche of bailout loan from Troika, so good news for Greece that they've managed to secure that. Again, we've got to bear in mind that's ahead of the German elections, trying to keep things quite stable and calm here. And we also had Draghi speaking yesterday. He sort of reiterated the dovish comments that we saw from last week's ECB meeting, emphasising the accommodative policy for a long time, also that rates will be at lower or present levels again for an extended period. That's what he sort of classified it as. Okay, so where that leaves us sort of trading today, we've got FTSE around the 65.05 mark, we've got the Dow around 15,197. In terms of currencies, as I say, the bad UK data this morning has sort of hit sterling a little bit, seen cable coming off, trading 148.65. For the euro dollar, we've got it at 1.2865, and then for commodities, gold we're seeing around 12.48 spot 20. Brent, we've seen a better performance recently, so Brent crude trading at 107 spot 19, around that area. Okay, in terms of data then for the rest of the day, we've got some US survey coming out shortly. It's the US Small Business Optimism Survey. I'm expecting that to tick up slightly to 94.7. We've got an ECB financial statement for the Eurosystem coming out this afternoon, and then we've got from the NIESR, we've got an estimate of UK GDP. It's for the 3 months ending June, so technically Q2. The last reading for the 3 months was 0.6, so we'll look to see what we get from the NIESR. Obviously, we've had that weaker data this morning, so that may change things, but it's a first estimate before those official Q2 GDP readings that will start to come in next month or so. Okay, so that's it for today. Looking to tomorrow for Wednesday, we've got German CPI data out in the morning, expecting that to come in largely in line with the last readings. The expectations are about the same. We've got French industrial production and manufacturing production data. Expecting those to come in a little bit weaker than last, expecting negative readings from the last positive, so some weaker data looking to come out of France. We've also got Italian industrial production, and actually expecting that to come in better than expected at positive 0.3 from negative 0.3, sorry. And then from the US in the afternoon, we've got US mortgage applications, expecting the last reading there was down 11.7%, so watch out to see if that comes in a little bit better. We've got wholesale inventories and also wholesale sales. Inventory is expected to tick up slightly and sales expected slightly down. And then probably the event for tomorrow is going to be the release of the Fed minutes following the June 18th, 19th meeting of the FOMC. People are probably going to look into these they'll be looking at them quite closely and looking for some clarity in how the Fed is viewing the data that we've seen coming out. And also where we're looking to go, obviously, with this QE tapering and things along those lines, looking for some indications, any extra things. We've also got Bernanke speaking tomorrow evening after the release of those minutes, so again, that will be closely watched, closely monitored for any change in language or any specifics that he might let out. Okay, into Thursday, we've got overnight the Bank of Japan, the monetary policy the meeting will end, so they'll come out with their rates decision. It then follows with a press conference from Kuroda. That's at 7:30 a.m. British summer time. So again, watching out for anything that he might say or any change in policy over in Japan. Largely expecting them to say, stick with how they're going, looking for that 2% inflation target, remember. From Europe, we've got French CPI data, expecting that to tick up slightly to 0.2%. We've got the ECB monthly report as well out in the morning. And then from the US, it's US data the afternoon. We've got those initial jobless and continuing claims. Last week we saw a good non-farm reading, saw it come in at 195,000, better than expected. And we also saw the prior month's reading also revised up to 195,000. It's said that if we stick to around this 200,000 plus mark every month, then this will see an expansion and people coming into the employment sector. So really good. We need to see that sort of 200 mark. So if we stick and maintain at the readings that we're seeing currently, it will be looking pretty good for the US. Otherwise, then, in terms of data for the US tomorrow, we've got import price index, expecting that to come in flat, and we have got also the US monthly budget statement later on. Okay, and finally into Friday, again from the Bank of Japan in the morning, we've got the monthly economic report for June, so just a recap of what's been happening there and the data that we've seen. From Spain and Italy, we get CPI data, expected that largely in line with the last readings that we saw. From the UK, we've got construction output, expecting that down 2.8% from down 1.1% last. Again, this will be closely watched, especially following the weaker data that we saw this morning from industrial production and manufacturing production. Probably people will be watching out for this construction output to see if that comes in as weak as the others, and then really will be considering what we can expect from the Q2 GDP reading from the UK. Otherwise, from Europe on Friday, we've got industrial production, expecting that to slip down as well to negative 0.3%, sorry. We also get that ECB LTRO repayment, as we do every Friday at 11 o'clock, the announcement of what the banks will repay next week. We saw quite a weak repayment or announcement last week, so seeing how sort of the liquidity situation is playing out there. And finally, to finish off Friday, US PPI data, expecting that largely in line with expectations. And we've got the University of Michigan confidence survey, expecting that to tick up slightly to 84.8 from 84.1. Okay, so that's it for this week, and watch out for those Fed minutes. We've also got the monthly reports and the rest of the UK data for the week. Okay, thanks very much. As usual, any feedback is very welcome.